couple of months ago, I did a video on AppLovin stock, APP, calling it a potential AI winner. I thought it was very intriguing, so intriguing that I wanted to do some more work, some more research. I did 2 follow-up letters exclusive to my Unrivaled Investing community, where I called out not only a little bit more detail on AppLovin, but also that I was buying some shares for myself. And subsequently, the stock ripped over 200% higher. Today alone, it's up another 40% plus. In this video, I'm going to talk about what I did right, what I did wrong, a high-level overview of what does AppLovin APP stock do, along with a framework for where I think it could potentially go in the years ahead. If you enjoy educational investment content, you're watching Unrivaled Investing. My name is Daniel. Let's dive right in. So put simply, AppLovin is an advertising company. More specifically, they offer a series of tools historically targeting game developers that are aimed at leveraging their Axon advertising algorithm to acquire new users. That's this app discovery tool, and increase monetization for the various different games. So that way they can, make the most of their advertising space. The reason why the stock is up so much today is based on exceptional results where their earnings vastly exceeded analysts' expectations, and they're just growing like crazy and putting out attractive and compelling guidance. You can see revenue up nearly 40% year over year in the third quarter, up to $1.2 billion. This is driven by their software or advertising segment that has grown from $500 million to $800 million plus in revenue. What really blows investors away is the 70% plus in EBITDA margin. This is a league of its own in terms of profitability, and you saw that it ticked up in the most recent quarter. Some of this was one-time in nature, but either way, this is very special. This is a special business when you're able to talk about 70% plus EBITDA and this type of growth. And it's translating into my own personal North Star, which is free cash flow. That is what I want to see. Last year, it was under 200 million in the quarter. This year, closer to 550 million. That is exceptional to see this type of free cash flow. This is why Wall Street is loving on AppLovin. Why are they able to deliver these results? As Adam Ferrugi, the co-founder and CEO of AppLovin, talks about, he talks about how the business today is on top of 1.4 billion daily actives, talks about having the largest mediation solution in the sector. What does that even mean? Their mediation tool refers to Max, which acts as a middleman for app developers, helping them get the best ads and highest possible revenue by connecting them to multiple ad networks in one place. That's what this mediation solution provides. The reason why this is important is that by effectively getting in the back door with various different mobile games, they can see, hey, these are the ad networks, these are the advertisements that work best to acquire these users. That data then feeds into their acquiring data business, their app discovery, that advertisers, e-commerce now will spend money on to say, hey, we want to find these great leads. So one tool sort of complements the other. You have this virtuous cycle, and it's resulting in ultimately an algorithm that gets better and better at acquiring new users, finding the valuable users for game developers and ultimately e-commerce, which is tapping into a much, much bigger market over time. This is part of the reason why Adam Ferrugi has made sort of the flippant remark that, hey, I could give away my AI algorithm and that would be fine because we have so much data. And the data comes through the mediation solution, which helps these different game developers across 1.4 billion daily active users monetize across various different advertising networks. So that data from that, seeing like, oh, where did the user hover their finger over the button before clicking? That type of, insights, building anonymized profiles, creates very valuable insights in terms of, hey, these are the types of users that you might want to acquire. So going to AI Ticker Chat, this is for folks where if you want to just chat with AI completely for free to use, you can, the AI feature in terms of chatting, you can ask like, hey, why is AppLovin growing so quickly? Or what is management talking about? And the AI will summarize what's going on. And it's talking about, look, management's calling out 20 to 30% growth that they're expecting from their mobile gaming advertisers alone, but their recent e-commerce initiatives are just going really exceptional, talking about substantial returns. And this is what's getting Wall Street super excited. This is no longer just a mobile gaming advertising business. This is tapping into a much bigger pie, which is e-commerce, which is very similar business model or very similar idea of, can you find valuable leads, not only for new users playing games, but new shoppers with e-commerce? And can you get paid based on that sort of conversion? So far, the results speak for themselves. Where does AppLovin stock go from here, and what are my own personal lessons. In full disclosure, I own a stake in AppLovin, APP stock. This is not financial advice. Also, just earlier today, Francisco, a premium member of the Unrivaled Investing community, shared the following. This is a direct quote. This is from earlier today. I just wanted to thank you for all your dedication. In these 2 years, I've not only built a profitable portfolio of solid companies that outperforms markets and turmoils, and of course paid for this subscription. It's both the closer you can get to a mentoring from a value investor and a good community to pick bright brains, even with their own different journeys. He's talking, of course, about Unrivaled Investing. If you're looking for compelling ideas, or you're looking for a community to, learn from, share different ideas, come check out Unrivaled Investing, the Discord feature, the premium community feature. That's for premium subscribers. By the way, the prices are going higher at the end of this month, so now is the time to lock in the favorable rate. Let's talk about what I did right, what I did wrong. What I did right, and what continues to be emphasized in my mind is correct, is this checklist. Find founder-led businesses. Find businesses where management is so aligned with you as a shareholder that you feel better about owning it day in, day out, no matter what challenges is going on with the economy, the company. You want aligned management. You also want compelling valuation. In this case, when I first started talking about AppLovin, it was trading at a teens multiple of free cash flow. That is a compelling valuation, especially when management talks about, hey, we think we have obvious growth potential. They were previously calling out 20 to 30% annual free cash flow, or 20 to 30% annual growth. So when AppLovin met all three of these, I should have, reacted even faster than when I first did that video. I should have bought it the next day. I didn't. I then did more research on it, but very few companies meet this very simple checklist. And this checklist, in my opinion, is a North Star. My problem, and this is what I did wrong, and this is supposed to be me chasing after the rocket, money's flowing out of my hands. I wanted to invest more money in you. What happened? What problem? And this is directly from my letter. I talked about how AppLovin still stands out as one of the most intriguing opportunities out there, calling out 100 to 300% upside. This was after a 10% rally. So this was my second letter on AppLovin. But I looked at it, and I think my challenge was I was anchoring to the fact of where it's been, that there had been so much volatility, and I wasn't spending enough time saying, look, there aren't that many companies that meet this checklist that jump out, where it's trading at 20 times free cash flow and has that type of growth profile. And it just doesn't happen that often. And so it should have gotten a premium. And the unfortunate reality is I think my inner investment animal spirit might be a sloth, because I just don't like to move super fast. I want a low turnover portfolio where I sit and partner with management for decades or years, into the future. And so my nature is not to say like, oh, this is great, I'm going to, make a big bet on this. So as a result, I looked at this and I said, man, a lot of this smells great. Let me do two letters, one after each other, as I dig further into this company. And I bought some shares, I think in the 80s, maybe high 80s, but I just didn't buy a huge position. I was hoping like, hey, maybe I can move slowly, as I oftentimes do. But I think that's an important lesson, which is that, sometimes you don't get another bite at the apple. And so maybe move more quickly if something checks, all the checklists. That's the challenge. Looking at the current valuation, and also look, I'm not saying this like, oh, I missed it. The reality is I love the investment game, because every day, every quarter, there are going to be opportunities like this where maybe it works out. Maybe you have a stock drop 70% in a day, and that turns into a life-changing opportunity. And so I'm referring to my own personal experience, where in 2008, one stock I owned did drop 70% in a day, and then I put a third of my assets in it, and it worked out extremely well, and it was a life changer. But that's, I share this just because the nature of the markets is to be volatile, and try to align yourself with those types of companies where, you say, hey, I'm excited to join with this. I'm excited to partner. And look, it's okay to miss. It's okay not to have made this a huge bet. I'm obviously kicking myself a bit. But there will be many, many more pitches in the future, many more hopefully fat pitches in the future. Looking at AppLovin now, around $2.2 billion in free cash flow annualized based on their most recent quarter, growing sales around 38%. This is a league of its own, as I've previously called out. Yeah. And market cap is up, to over $80 billion. Not as cheap as it was a few months ago. So clearly had some valuation expansion, going from 20 times to 35 to 40 times free cash flow. So valuation expansion, but you also had a lot of fundamental expansion as well. I look at this valuation. I personally don't think it's that insane. I don't think this is crazy. I mean, 35 times, 40 times free cash flow for a business that's growing 35 to 40% per year, and management saying like, hey, 20 to 30% per year going forward in terms of growth. So I look at this and think, not bad. Could the valuation go even further higher from here? Absolutely. Could you also drop significantly? Absolutely. I mean, part of the reason why I didn't move super fast on it was my concern of the Apple and Google stores. They can put their finger in the pie, make data collection harder, ultimately make advertising businesses like AppLovin just give them heartburn. You saw Apple do that to Meta, previously. So, I look at this and I think AppLovin, you don't oftentimes find businesses where management says, hey, here's clearly the thesis for why we're growing very significantly in the years ahead. And that arguably does warrant a premium valuation. And also, if you're able, this is the reason why I don't view this valuation as that crazy, is if you were to have a situation where, believe me, there are plenty of things that are at a crazy valuation right now. Maybe I'll do a video on one of them. Rhymes with Schmalentier, where the free cash flow doesn't, you can't tie it to something like AppLovin, where it's just crazy. The reason why I don't view this as that crazy is because looks at, if you have something at 35 times free cash flow and they grow 20% a year in the future, there's a chance that in 5 years from now, it's still trading at 35 times free cash flow, in which case shareholders are still quite happy that the fundamentals driving the stock price has grown, at 20% a year. So there is that sort of possibility that you have with AppLovin. So I don't view this as crazy. And maybe I shouldn't have made this video even in the first place, because I'd love another chance to bite at it as maybe a reformed sloth. I hope this video has been helpful for you. Thanks so much for tuning into Unrivaled Investing.